Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
We're going to stay on the Middle East and to why the U.S. could be possibly drawn more deeply into the attacks on Iran's nuclear facilities. And that's where we want to go next.
For more, we head to our Washington, D.C. news bureau and to Bloomberg News Pentagon and national security reporter Tony Capaccio. First up, Tony, is the U.S. preparing for war right now?
I think they're positioning what they call assets in the region for the eventuality of strikes. I'm not sure you can call it war. But the tanker thing, the 20 tankers in the region, I think that's a message to Iran that the U.S. may be preparing for round-the-clock bombing campaigns in parts of Iran, aided by air refueling aircraft.
When is war war and when is it just hostilities or conflict? Help me out here. I have a hard time understanding the differences.
It's called declarations of war. Remember Iraq? We were going into weapons of mass destruction, and then there was a regime change. And all the cataclysm that happened from that for over a decade. A lot of echoes here. Regime change, undeclared war, preemptive strikes, a lot of 2003 echoing through this conflict.
Why does the U.S. maybe have to make its presence known in Iran? And I got to say, all credit to Tim, who, like on our morning call, was saying, we got to talk about the bunker buster. Give us some background on that and what we know and why that might also pull the U.S. possibly into the conflict with Iran.
Okay, the bunker buster is a massive ordnance penetrator. It's a 30,000-pound bomb that can only be dropped from the B-2 stealth bomber. They are now based in Whiteman Air Force Base. They were in Diego Garcia recently, but they've come back. So they would have to do long refueling missions, maybe 15 hours, 16 hours in flight one way, do their bombing, precision bombing of the Fordo enrichment facility, and then probably land at Diego Garcia. That is an act of war. It's not a preemptive strike. It's an act of war on an enemy that we don't have any, that hasn't threatened the United States recently. So the public has to be aware of that. But that would be the biggest biggest contribution we can make to destroying that facility. It's the only bomber that can do that, and those are the only weapons that really can penetrate deeply enough, and they can drop sequentially, one behind the other, and pound the living daylights out of it, unfortunately.
Why is it that the U.S. is the only country that has this bomb and the ability to deliver this bomb? Why has the U.S. not shared this technology with other parts of the world, with its allies?
Well, A, it was secret until a number of years ago. The Pentagon is still very reticent to talk about it. But B, it was designed around the B-2 bomber, the stealth bomber. You know, you can say what you want about it, but it's had successful missions since its introduction. Its first attacks in Serbia, like in the 1996, I think it was. But it's our technology. It's a classified weapons program on a classified bomber. No other nation in the world really has that capability, that platform to carry it. Now, we have sold other bunker busters to Israel in the 2,000 pound variety, but those can be dropped from F-15Es and some of their other aircraft, but they can't be dropped from F-35s. Those bombs are too big for an F-35.
Your experience on this world, covering the Pentagon, understanding national security, when the president calls his advisors into the Situation Room, what's the optics on that? Are there any conclusions we can make, or is it just where they go to have a safe conversation about national security issues?
I think the optics are that the Joint Chiefs of Staff, their job is to present the president with not only options for military power, but the potential collateral or down-the-road impacts that the politicians might not have thought of. I think any talk with Trump would also discuss the implications going back to Iraq. Remember the weapons of mass destruction? All of a sudden, the society collapsed there over 2 years, and we were sucked into a 10-year conflict. I think that would resonate with the White House. This president, say what you want about him, but he has not voiced support for long-term preemptive strikes and getting us sucked into Middle East wars.
I want to go back to the B-2 Spirit. You said it's at Whiteman Air Force Base right now is where they're stationed, where they're based. Is it possible that these could move to a different position ahead of some sort of U.S. military action, and that would indicate a certain red line that the U.S. has crossed?
It definitely could. They could do a high-profile flyaway, basically. They're not going to fly from Whiteman without being seen by local plane watchers and then plane tracking software, which may or may not be able to pick up every part of a stealth bomber's flight. But people in the region, in the area there, they'd be watching for these things to be flying off, and there would be a lot of chatter about it. But yeah, if we flew these to back to Diego Garcia, that'd be a very strong signal. If we flew these to Lakenheath Air Force Base in England, that would be a signal too. Those are Diego Garcia's got the ideal location and the hangars, the hangars to store these valuable airplanes. But I think the U.S. could send a real message by parading the elephants through the air, these B-2 elephants, and letting the world know.
You're not expecting boots on the ground by the U.S., though?
Well, we've got about 40,000 airmen, airwomen, airmen, naval and Army, Navy, Marines in the region. It's like 4,000 or so in Iraq and another 2,000 or so in Syria, all for the counter-ISIS campaign. But I'm not expecting more boots on the ground, if that's what you mean.
Okay. You said 4 or 40?
40,000 in the region.
Okay.
2,500 in Iraq.
Okay.
And about 2,000 in Syria. So the 40,000 would include airmen in various bases around the region. We have many bases. And then the naval forces. So that'd be the cumulative.
All right. Thank you so much. Can't even tell you how much we appreciate it. Tony, as always, Tony Capaccio, he is Washington, D.C.'s man on the ground when it comes to the Pentagon and national security issues, joining us from our bureau there. So appreciate it.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
In the meantime, we got some headlines this morning, and it had to do with the retail sector here in the United States. U.S. retail sales falling for a second straight month in May, suggesting some anxiety over tariffs and also finances prompting maybe consumers to pull back a bit after an early year spending rush. U.S. retail sales, here's the data, 0.9% to the downside in the month of May. That's the largest decline since the start of the year, with 7 of 13 categories, Tim, posting declines.
We've got a trusted voice on retail, somebody who's analyzed this area through multiple cycles and gets into the details like no one else. The founder, CEO, and Chief Research Officer of Telsey Advisory Group, Dana Telsey, here in our Bloomberg Businessweek studio. I want to start with the big picture data, Dana, the data that we got earlier today, the largest decline since the start of the year. Obviously, people not buying cars has a lot to do with this, but is it proof that tariffs do affect the way that customers think about buying things?
So a couple things you have. Yes, it was one of the weakest months. You look at cars, which were the real weak link. It's 20% of retail sales. You've seen some of the other data points, whether it's sporting goods, department stores, frankly, did a touch better. I think overall, the pull forward of sales, I think we're seeing some of that. We put out a tracker every Tuesday of 80 items and how the prices have changed. We've done this for 9 weeks now. We're going to continue to do it. We haven't seen much change in prices yet. Expectations are second half of July into back to school is when you'll see the price upticks. And when you speak to companies, it'll more be on some of the goods that are newer and have more product or make or embellishment in them. Essentials are going to be watched very carefully. The phrasing is surgical and select items where there are price increases. That's where it will happen. It won't be across everything. But the mood and the sentiment, look at the numbers you got Friday from the sentiment index. Those are better than expected. A little surprising, given the headwinds that you're seeing in some of the services. The restaurant numbers certainly continue to show a downturn.
So, yeah, so add it up for us. Like, you've seen cycles, you've seen stress points that we have gone through, whether, great financial crisis, COVID, like there's a lot of things. How would you describe the retail environment? And I know it's hard to throw everything in one bucket because there's so many different verticals.
I think right now it's more uncertain. The change that's different this retail environment than others, even luxury has come down. Even your high income spender isn't spending in the same magnitude, and you don't have the flood of tourists that have come to the United States like you had in the past to buy those discretionary items. You're still seeing essentials, grocery. That's where the consumer is spending. They'll spend selectively on some services, but take a look. We've seen airfares. Look at JetBlue today. Talk about reduced demand. So how I add it up is it feels a little bit more uncertain because of the volatility, and it's not complete downtrends across the board. It's very selective, and I think, could it come? Yes, I think it's more, let's go into the summer, through the second half of the summer, and see what these price increases are. But there's more concern over slowing than growing.
It's interesting that you brought in tourism here, especially when it comes to retail. I'm wondering on the other side of things. We've heard from executives at companies including Coca-Cola that the crackdown on immigration is actually affecting their sales. I'm wondering, from a retail environment, is the ICE crackdown on undocumented immigrants weighing on sales for any retailers out there at this point? People being afraid to shop, people afraid to go out, that sort of thing.
And you think about it for restaurants, in terms of the workers working in restaurants, you've certainly seen at some of the low end points and the retailers. It's interesting that the dollar stores performed okay. So that's where you would think it would show up, but it hasn't shown up there as much. And also you look at Walmart. Walmart's sales were better than expected.
So we are seeing, I hate to say trading down. I feel so not nice, but I just feel like maybe just people are being smart, right?
Yeah.
And looking for the best bargain.
They are trading down. Look where Walmart has talked about their biggest growth coming from is their highest income consumer. You've seen it from others. Look at TJ Maxx on the off-price side. You've seen what they have, and they're an umbrella for pricing. So they'll always be lower than everyone else, and I think they're going to be a beneficiary as we go through the back half of the year.
When you and I spoke earlier this spring, you mentioned that we could be seeing some empty shelves later this year. Has that materialized in anything that you cover, and is that still a possibility?
It's a possibility. It hasn't materialized yet, because the goods that are on the shelves right now, there's still some of the lower cost goods. Ordering for holiday is happening right now, and it would show up, frankly, first when you get to the holiday season. But you know what? You have TJX buyers overseas in China right now looking to take over and take control of and acquire those canceled items. So go to the off-pricers.
Yeah, kind of fascinating. Well, and I just wonder, ultimately in terms of supply chains, right? We talk about so much of that because of the tariffs. Dana, when you think about, clothes and things like that, I mean, it's already been moving away from China, correct? Like, give me some perspective on where all of the stuff that we are wearing, where it really is manufactured.
So where things are coming from, yes, they've all looked to reduce their exposure to China. Vietnam has been very popular. Mexico, Cambodia, Brazil. Hard to come back into North America and the U.S. given the high labor costs. But it's been Mexico, it's been Vietnam, it's been Brazil and Cambodia that we hear goods are going towards.
How much is still made in China?
Depends on which type of retailer. Everyone is trying to get to single digits. No one wants to stick there at double digits.
Was that happening ahead of?
It's been happening since the last time we had tariffs. Everyone had accelerated it.
Okay.
But keep in mind, one of the beneficiaries of China, labor costs are compelling, and the make that they put into the product and the expertise is faster and better than others. As a longtime sourcing executive always tells me, there's no China like China.
Wow. Okay.
But it seems like, Dana, at least for President Trump, it doesn't matter if it's made in China or it's made in Vietnam. If it's not made in the U.S., it's going to be hit with a tariff.
Yes.
So how are retailers dealing with that?
They'll raise prices on some selective goods, and it's a third, a third, a third. A third, they'll diversify their sourcing. A third, they'll share the cost with the manufacturer. And a third, they'll raise prices on select goods to the end consumer.
When you say select goods, do you mean, obviously we can't put them all in the same bucket?
Higher price goods.
Higher price goods because the consumer has a higher willingness to pay?
And because it's new and different, it's something that isn't a basic.
Okay.
Which makes me wonder, which companies are going to see it hurt in terms of their balance sheets. On that, first quarter retail sales, right? We've seen all these numbers. So which names do you think stand out really as the biggest winners? Which are the biggest losers?
You look at Birkenstock with their closed-toed shoes. Very popular, still doing really well. I think that there's definitely some momentum there. You look at Tapestry with the Coach brand. Mm-hmm. They've been excelling. They've been able to get better prices on some of their goods. You look at Ralph Lauren, who's been expanding their purview in terms of the demographics that they appeal to, and it's been working for them. And then you still see the value players like the discounters and like the off-pricers continue to win.
Who doesn't do
win?
well?
We've seen some of the women's apparel retailers be slow, haven't been able to execute as well. It's definitely been more challenging. You just had the announcement yesterday of At Home filing for bankruptcy again.
Right.
But these empty boxes are being taken by a lot of the dollar stores and the off-price retailers. The off-prices are each opening 100 stores a year.
Dana, before we let you go, are retailers afraid to communicate to customers that prices are going up as a result of tariffs, given what we saw from the White House pushing back on Amazon and on Walmart?
Yes, I think you do have that. And I think that's why the phrasing and the wording select surgical price increases, and it's not across the board. Look at our price tracker every Tuesday, and you'll see what changes.
All right, so second half should be interesting.
Very interesting. Want to see that back to school time period. Back to school typically is a pathway to the upcoming holiday season. Look what it was just announced today, that Amazon's Prime Day is going to be 96 hours, 4 days, longer in length. Let's see consumer response.
All right, fascinating stuff. Always appreciate the deep dive. Thank you.
Thank you very much.
Dana Telsey, of course, she's the founder, CEO, and research officer of Telsey Advisory Group, joining us right here in studio.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Two giant ocean-going tankers collided and caught fire off the coast of the United Arab Emirates near the Strait of Hormuz energy choke point. Separately, two vessels were approached by Iranian boats near the strait in the last 36 hours, which is noteworthy, of course, during all of the tensions we are seeing in the region. Now, the incident did rattle global oil and shipping markets, with forward freight agreements rallying and oil tanker rates. They surged more than 50% due, Tim, to the increased tensions.
Yeah, the Israel-Iran conflict on the radar of the global shipping industry, and that's exactly where we want to go right now. Stamatis Tsantanis is chairman and CEO of the publicly held global shipping company Synergy Maritime. The ticker is SHIP. Also, United Maritime, USEA is the ticker. United was spun off from Synergy back in 2022. Stamatis, good to have you back in the Bloomberg Businessweek studio here in New York. Last time you joined us was a few months ago. The conflict between Iran and Israel was, I think, not on anybody's radar at that point. What is the backdrop right now, given the regional conflict?
Well, thank you for having me once again. It's great to be here. Well, I mean, I don't know what to say. I mean, every other month you have a different situation coming up. We started with the Russian invasion to the Ukraine, and then we had the Red Sea, the Houthis. And now we have this. So, every little uncertainty that comes up, it's great for...
Is it a little uncertainty, or is it something more significant?
It's, I want to be confident. I want to stay very, very optimistic that nothing, not a wider war is going to go around, but it's certainly, one of the situations where we have to be really cautious about.
Have you had to change the routes of any of your ships as a result of this conflict?
Absolutely. I mean, we were going through the Red Sea all the time, connecting, let's say, Australia to Europe and all that. Now we have to go around the Cape of Good Hope, so that has added a lot to the ton-mile effect. Mm-hmm. And of course, the pollution, because you do more miles, you emit more CO2s. It's more expensive for the consumers. You go a longer distance. So the answer is yes. I mean, every little thing that happens, or bigger thing, it's good for rates, but bad for the earth, I guess.
Do you see it getting worse in the Strait of Hormuz anytime in the near future? I know you said you're optimistic, and you're optimistic by nature, but that's a real energy choke point, as Carol mentioned.
I want to believe that nothing serious is going to happen, and the collision you had today is not actually a product of war.
Correct.
It's the shadow fleet. The shadow fleet has been going around since the Russian invasion, and you have all these undocumented and shadow ships going around, and there's a danger, and it's only a miracle that we haven't seen more of these things happening because of the shadow fleet.
Forgive me.
Yeah, that's a product of the previous war, not like this war.
Well, how do you, as someone, right, who's got to watch these things so closely, determine or think about, okay, this is not such a big issue, this could be something more substantial?
Well, we try to be prepared. I mean, except for the insurance and stuff, whenever we see any conflict arising, we don't want to put a health risk of our crews, of our people, so we just stay out of that. And we're lucky to have partnered with some of the world's biggest charterers, and whenever we tell them that we want to avoid war areas, they listen to us. So they're not going to push us to go through the war areas.
What tools do you have on ships to prevent from pirate attacks or defend from pirate attacks?
If anyone says that they have sophisticated tools avoiding that, they're lying. Because, we just avoid these areas, and whenever we have to cross pirate areas, we always have armed guards on board the ships. Otherwise,
there's no other way to do it.
No other way to do it. I mean, whoever says that, these are commercial ships, slow-going commercial ships. It's
easy targets, in other words.
Easy targets, yes. Yeah. So you just avoid it altogether.
Super big, but slow and move, right?
Super big, yes.
Hey, one thing I want to ask you, what's great is Tim and I love to watch money flows, right?
Yeah.
Money tells you so much, but I also love to watch when it comes to transportation. Transportation flows tells us a lot about what's going on in the world. The U.S. more protectionist policies, how has that impacted global dry bulk demand? What are you seeing in that regard?
Well, I'm sure it is for the right reason, eventually. But so far, it has created a lot of uncertainty. A lot of people are just don't know what to do. I mean, imports in the United States have really dropped significantly in the last few months because of the potential tariffs that I don't even know if they have kicked in or not kicked in already. So we need certainty, and we need to make sure that people will be able to trade always for the benefit of the U.S. consumer and always for the benefit of everybody. But it really has to be like a dependable and, to know what you expect. That's the thing.
But are things already changing in terms of your flows back to the United States? We have seen changes, right, already?
Indeed, yes. I mean, what we do, which is iron ore, coal, and bauxite, doesn't really change. It's still super strong, the demand for these raw materials, because you need it for infrastructure. As you know, a lot of investors, including a lot of people here in the government, have invested significantly in infrastructure in the Middle East. You have $1.6 trillion of investments happening there, new nice buildings and all that. So this is going to happen. They're all fully funded, and it's good for our business, I guess.
On the protectionist policies, I'm wondering what you're seeing in terms of goods flowing to and from China, and specifically if China is looking elsewhere for commodities that are typically sourced from the U.S. I mean, we could talk grains, we could talk corn, soybean, wheat, and the like, or we could talk other commodities too. What are you seeing?
Well, suddenly the last few weeks, we saw a surge in exports from the U.S. Gulf, the American Gulf. So we see a surge in
yes.
we see a surge
the Gulf
of exports.
of America.
Yes,
okay.
exactly.
Just
exactly.
Well, I just wanted to hear what you said.
So
okay.
we see a surge in corn products, maize, grains, and all that. So that has been good, actually. We were not expecting that, and we came into
this. But coming from the U.S. specifically?
Yes.
Okay.
And we do a lot of coal out of Baltimore.
And going where?
To India and in China as well. We see that picking up slowly.
It did slow down.
It did slow down a lot, yeah. But now it's picking up again. I don't know if it's going to be there to stay, but for the time being, it's going quite well the last few weeks. Let's hope it's going to remain. And we do a lot of coal trades out of Baltimore to India. So we've done a couple of trades recently, which we hadn't done for a while.
So in terms of any of the flows that have shifted, is it just, in your view, kind of defensive maneuvers and just a result of maybe short-term blips, and you think things are going to go back to the way it is? Or do you see some new long-term trade flows based on the shipping demand?
Well, China's reliance to the U.S. grains has dropped a lot. I mean, they learned their lesson in the previous administration, not the immediate previous, but the previous before that.
Mm-hmm. Yeah.
And they have now they're more dependent now in South American crops. So that's the crops. So that's the thing. If it ever gets back to importing more and more grain products from the U.S., I hope it does, but it doesn't really seem like that in the near future.
Before we let you go, just 30 seconds. I think right now there's a focus on where ships are built that hasn't been in focus really ever in my career, specifically Chinese-built ships. Are there any Chinese-built ships in your fleet?
In our fleet, out of the 29, we only have one, which is basically a Japanese yard based in China. So I don't know if that qualifies for Chinese altogether. But the vast majority is
made in China.
Yes, made in China, but not really by a Chinese yard. So no Chinese interest. So I'm not concerned about us. The only good thing I need to say is we've been in discussions with the U.S. administration about that issue, and they're listening. They're positive and they're listening. They want to find a solution. So they're not like totally black or white. I mean, they want to find a solution.
Stamatis, love it when you join us.
Yeah.
Stamatis
Never enough time.
Tsantanis, Chairman and CEO of the publicly held global shipping company, Synergy.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
When the word uncertainty is used over and over, we lean on other factors and metrics to help define a time period. That includes something like global real estate, Carol, which of course is sensitive to macro factors like geopolitics. And yes, the interest rate environment, which we just discussed with Mike McKee.
Yeah, one company with a view on all of this is JLL, former Jones Lang LaSalle, the publicly held global professional services firm specializing in real estate investment management. Travis McCready is the head of industries leasing advisory in the Americas for JLL. He's also chair of the JLL Global Life Sciences Advisory Board. He oversees brokerage and advisory for the company's key global industry verticals. So we're talking about life sciences, healthcare, data centers, energy security and defense, technology and higher education. There's a lot going on. So let's get to it. He joins us from Boston. You've got to be a busy individual, or maybe you're not. This is what I want to ask you.
You're not busy. Of course he's busy. He's got screens on screens in there. He's very busy.
You do have
screens on screens on screens. Yeah, I'm busy.
Well, listen, as Tim mentioned in the lead up to you, that when there's uncertainty and folks are saying uncertainty a lot, heads of companies are saying one of our conversations on global shipping, uncertainty came up a lot. You know, where are you the busiest? Region of the world, area of the United States, category of real estate? Give us a picture, and where are you not busy?
Wow. I'd say uncategorically, without doubt, we're busiest in data centers, which is an area that affects pretty much every aspect of the economy, every vertical and technology vertical that we cover in real estate. Our ability to bring online additional data centers across the United States is a rate limiting factor to the growth of pretty much all our verticals. In that regard, data centers are popping up anywhere that there's a correlation between access to power, access to the right amounts of land, and cooling infrastructure, which would include, of course, water and wastewater. So that's my area of biggest activity levels. Second being advanced manufacturing. And that's manufacturing, whether it's for semiconductors or for biologicals. We're seeing a nice steady clip of activity around advanced manufacturing across the United States.
I'm wondering how you look at the protectionist policies that the Trump administration, I won't even say toying with, the protectionist policies that the Trump administration has established or has actually put into action at this point. We're talking tariffs. We're talking about other ways to keep jobs here in the United States and keep manufacturing here in the United States. How has that affected your business?
Yeah, I think there's these policies are still, a lot of them are still in theory. So it's the uncertainty around these policies and how they'll play themselves out in practice, which is really driving a lot of decision making, or in many cases, lack of decision making by a lot of our businesses from a real estate standpoint. We definitely have felt post-COVID in particular the desire for businesses to control their supply chain. And this desire is really what's driving the advanced manufacturing sector. We've definitely felt a desire for increased employment around advanced manufacturing, particularly as it relates to semiconductors and energy and the like. So these policies haven't really had the type of effect that we think that we've wanted them to have, partially just because they haven't been implemented in many cases as of yet. But one policy that's really gotten a lot of our folks in the life sciences in particular spooked is the most favored nations clause. And this notion around MFN pricing really shifts the algebra around pharmaceutical prices, and then in terms shifts the discussion about profitability and plowing some of those profits back into the R&D enterprise. That's really having a deep structural effect on how our pharma companies are thinking about manufacturing here in the United States.
So play it out. So meaning that they're going. You mentioned the number two busiest area is advanced biological. So the thinking is, okay, especially pharmaceuticals, doing more, manufacturing more in the United States. And what about Puerto Rico? I thought at one point we were doing a ton of manufacturing there. Is there?
Oh, we continue to do a ton of manufacturing in Puerto Rico. In fact, next time you go to the drugstore to buy Tylenol, thank the Puerto Rican manufacturing ecosystem, because that's where 80 to 85% of all the Tylenol in the United States comes from. The advanced manufacturing, however, we're talking about proteins, biologics, cell and gene therapy manufacturing. A lot of that's happening in a smaller scale and it's happening domestically within the contiguous 48. That's the type of manufacturing we've seen be announced post-tariff conversation. We had about $27 billion worth of those announcements. The degree to which those announcements come to fruition, however, is what we're waiting to see. There's still a lot of uncertainty around both the tariff conversation and MFN conversation, and that will drive the degree to which, or the rate at which, those manufacturing facilities are actually executed.
I wanted to talk geographically a little bit with you because you've got such a great view on what happens around the country and around the world. For the ever since I've been doing this job, the Sun Belt, we've been talking about it growing and growing and growing, and I'm starting finally to see a shift when it comes to the Sun Belt, some weakness happening there right now. And I know you don't specialize in residential. That's where we're starting to see some weakness, but certainly commercial is tied to residential. Tell me what you're seeing in the Sun Belt.
Yeah, the Sun Belt's in both an exciting and slightly risky part of the United States right now from a real estate standpoint. On the one hand, you're absolutely right. We're seeing demographic shifts into the Sun Belt, into the southern United States, and with that flow comes commercial activity. On the other hand, we're also seeing structural weaknesses in the grid in particular, and the energy needs that these advanced technologies, whether it's semiconductors. Or even our healthcare clients, the energy needs that they're demanding, we're increasingly having difficulty finding those sites, finding that power infrastructure in order to satisfy the commercial demand. So you're absolutely right. The point of signal strength, obviously, that we'll see first is around residential. But the safety, security, strength, and growth of the grid will dictate whether or not we can continue this growth pattern going forward.
We've actually had some really deep reporting on this here at Bloomberg, this idea of, folks that play into kind of the electrification play, the power demand, whether it's through data centers, that we just don't have the skilled workers to do it. And it's not just a U.S. thing, it's actually a global thing. And I'm just curious, from your perspective, which is the real estate play, are you seeing, you said data centers, that's your busiest area, but are you seeing somewhat any kind of pulling back or slowing down because there isn't either the labor to supply it and what's needed to be done, or there's not the power there to supply it?
We have this section of our business we call location analytics or location advisory, which basically is a fancy schmancy way of saying that people's decision making is very complicated, and there are a lot of variables that go into where to site a business or which state to locate a business. It's not always about tax incentives or other sort of cash incentives. It's really about access to 2 or 3 core variables. They're always at the top of a decision. One is power, and the second is people, human capital. And it's our ability to be able to train the workforce of tomorrow that will be working in these advanced facilities. Again, that's the second rate limiting factor of our growth. And here is where we need the technical schools, we need the community colleges, and we need higher education to be able to support that thirst that we have for trained human capital for these roles. So we have a very, yes, we're real estate, and we focus on infrastructure. But increasingly, we have to focus on our ability to be able to deliver skilled workforce to be able to work in our facilities.
So relevant to our times, right? And for all the investors who are listening, right, when we see these go-go sectors, whether it's data centers, AI, there's a huge technical equipment, but human capital infrastructure that's needed to power it going forward. And it's something we need to think about the momentum, how strong it can ultimately be. Travis, great checking in with you. Travis McCready, he's head of Industries Leasing Advisory and chair of the JLL Global Life Sciences Advisory Board, joining us from Boston on this Tuesday.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.